Hello fellow traders. We've all been in that situation where an indicator looked perfect, everything lined up, and the trade still went the other way. This video is about understanding why that happens. Today we'll look at the real AMD setup that seemed clear cut with RSI, showing overbought levels and volume surging, but instead of reversing, the price kept climbing. The goal is to uncover what went wrong and how to use indicator signals more intelligently in real trading situations. Today we're going to get into indicator mistakes that can ruin your trades by Pajama Trader. Let's get into it. Why is one signal not enough? Indicators such as RSI, volume, and price action provide valuable signals, yet none are infallible. AMD's RSI breach above 70 is a classic overbought warning, but it failed to trigger the expected reversal, showing how reliance on an indicator or a single indicator creates opportunity for error. It's easy to fall in love with a signal that looks convincing. When the RSI crosses 70, most traders immediately think time to short, but AMD teaches us that the market doesn't always follow the textbook. The RSI said overbought, yet the price action refused to drop. One indicator can hint at market behavior, but it doesn't confirm it. True edge comes from combining signals, price patterns, volume, and context, so we can all act on probabilities, not hopes. Think about the times when an indicator fooled you and how the confirmation might have helped. If this video connects the dots, give it a like. Share with others that are looking to fix being shaken out on trades. And subscribe for more Market Edge videos like this one. AMD RSI false signal, the trade. On October 17, 2025, AMD's RSI crossed 70 and traders shorted the stock in anticipation of a pullback. Instead, the price stayed strong and advanced. Strong volume helped sustain the move, while a doji candle added context to the market's support for the gap. On October 17th, the AMD's RSI broke above 70 and many traders jumped in short expecting a pullback. But it stayed strong and pushed higher. And we'll look closely at the chart. The volume was pretty heavy and a doji candle formed near support, showing buyers were still active. Together, those clues suggested strength, not weakness. This moment reminds us that the market's reward with patience. Waiting for confirmation protects us from reacting emotionally to a single flashing signal. The case outcome in trade management. I wanted to go over this AMD chart. On the 17th, it had a pretty nice doji here, but when you look at the RSI, it was climbing. So if anybody was getting in looking at this RSI, they would be thinking that this thing's gonna fall over because of the high RSI. But what actually happened is that the move down got stopped by this candle here, indecision, and then from there continued to slowly grind back up. So what does that tell us? Basically, you have to pay attention to the volume along with the RSI. So even though we're showing a high RSI here, you got a volume spike, but then the next day you have nothing but selling. And then you see this volume spike here after a doji, which would indicate that there's going to be further upward momentum. Entering a short at 150 based on only the RSI signal resulted in losses, as the market rallied instead. Traders ignored volume and price structure that were caught on the wrong side of the move. This reflects the danger in oversimplifying and taking textbook setups as guaranteed opportunities. Traders who shorted AMD around 150 based on the RSI alone were caught wrong-footed as the stock kept rising. The result was frustration and loss, but also the valuable lesson. Indicators don't fail us. Our interpretation does when we ignore context. The price structure and volume were saying something different, but it was easy to overlook. Successful traders focus less on being right, more on managing risk. Using stop losses, scaling out, and analyzing multiple signals turns a false move into a learning movement instead of a painful one. Improving trading decisions. Effective trading requires confirmation among multiple indicators, context from price action, and strict risk management and volume. Strict management. Volume candlestick structure and fundamental news must supplement technical analysis to mitigate false signals. Stop losses and disciplined position sizing are essential in best practices. Better decision making starts with confirmation. When the RSI sends a signal, look for validation from volume, candlestick structure, and even broader market tone. Trading becomes consistent when analysis meets discipline. Setting stop losses and sizing positions properly turns uncertainty into control. The AMD case shows that mastering indicators isn't about predicting markets. It's about interpreting them within context. Think about how you can adapt your process to weigh information from more than one source before taking the next trade. Discussions of questions and answers. Everyone has probably experienced that one trade where that signal seemed perfect, but it completely went wrong. What did you learn from it? How did you adjust your process afterwards? And sharing those experiences helps us evolve. So what confirmation tools or cross-checks do you use before entering a position? Thanks again for watching this video.